Bitcoin ETF inflows hit a new high. Liquidity is coming in. Hello, I'm a Crypto Dmitro. Recently, inflows into Bitcoin spot ETFs have reached an all-time high, indicating that more liquidity is entering the cryptocurrency space. What impact does this have on the crypto market? In this episode, let's explore this topic. Please note that this video is informational and not constitute as investment advice. Investment in digital currencies carries very high risk. First, let's understand what a Bitcoin spot ETF is. In simple terms, a Bitcoin spot ETF is a financial product traded on the stock exchanges. Buying shares of the ETF is equivalent to investing in Bitcoin. The price of a Bitcoin spot ETF is linked to the price of Bitcoin by itself. But purchasing a Bitcoin spot ETF does not mean you directly hold a Bitcoin. This has both benefits and drawbacks. As we know, buying Bitcoin directly on exchanges can be complex, whereas a Bitcoin ETF removes these complications, making it easier for investors to invest in a Bitcoin. In addition to convenience, another advantage of Bitcoin spot ETFs is compliance. A spot ETF can help investors bypass some of the legal issues tied to directly investing in cryptocurrencies, which is a major benefit for institutional entry. For institutions, being legal and compliant is essential. With the Bitcoin ETF, the issuing institutions hold the Bitcoin and manages the private keys on behalf of investors. This allows investors to avoid the risk of losing them or mishandling private keys, making it simpler and more secure option for many. However, it's important to note that by buying an ETF, you are trusting a third-party authority to hold the Bitcoin on your behalf, while you own shares representing Bitcoins. The actual BTC and private keys are controlled by the ETF issuer. Now, let's examine the impact of these Bitcoin spot ETFs on the crypto market. According to reports on October 23rd, the net inflows into US Bitcoin spot ETFs reached 896.3 million, marking the second highest inflow in history. For the entire month of October, net inflows into Bitcoin spot ETFs totaled 5.3 billion. As a result, total Bitcoin holdings in US spot ETFs have now exceeded 1 million BTC, just shy of Satoshi Nakamoto's estimated holdings of around 1.1 billion BTC. If inflows continue at this rate, ETF holdings could even surpass Satoshi's holdings by the end of the year. The impact of the market is significant and complex. On one hand, the increase of Bitcoin's market capitalization may lead to reduced volatility. Volatility has been a major driver in the crypto market, fueling speculation and high returns that have attracted many investors to altcoins, including Bitcoin. If volatility decreases, we might see a shift in the crypto landscape, with the market evolving to resemble the more regulated, stable environment of the stock market. Will crypto retain its rebellious spirit as a hedge against the US dollar and the other fiat currencies? As originally conceived by Satoshi Nakamoto, the market is always changing, and it's hard to predict the future. Another point to consider is that ETFs may isolate these funds from the broader crypto ecosystem. Bitcoin's market cap could increase significantly, but this may not translate into growth of altcoins. As we saw in the previous bull markets, Bitcoin's role in the market might become like an elephant in the room. I believe a mechanism needs to be developed to allow funds to flow from ETFs into the broader crypto ecosystem. This could foster growth, creating a flourishing market landscape, like an oasis in the desert, or even like a jungle opportunity. Alright, that's all for today for my thoughts. Please share your thoughts as well, and predictions of the future market. And please leave your comments in the section below. You can also follow us on the Twitter, and I would like to ask you to smash the like button and subscribe on our channel.